Good morning, traders. This is Rick Majors here at Opteck.com, and this is our daily market briefing. Now, the week has been a quite interesting one so far, and as we come towards its close, we're really looking probably towards more of the same. At this point, we've had several interesting developments so far. The Asian and European markets, in stark contrast to their history, have been picking up a lot of the slack volatility-wise that the American market has simply not been delivering on it. And we can see actually in a lot of different examples, including the American currencies, that the American market is simply not pushing prices in any direction. It's just not happening. And it's become, a matter of a lot of debate, especially among a lot of the brokers here as well, and a lot of my analysts have been saying that it may just be a lull. It's a lull before the storm where people are holding back right now. People are not looking to make the big plays right now, not looking to make the big changes in the price because something really big is looking forward on the horizon. Now, the one thing that we could attribute that to would be, let's go down here to our next month coming up on the, let's see here. No, I went too far already. Here we go. Friday, April 4th. The non-farm employment change. Theory is right now that this is what people are keeping their money around for. We have the non-farm employment change on Friday. And then on Wednesday also the ADP. These are two very, very highly impactful events determining creation of jobs in the United States in the past month. Now, because of the pressure the American government has put on itself in order to generate positive sentiment towards economic recovery and growth, the impact that a lot of American announcements that will have relation to economic and, of course, industrial type events are going to be double their effect and impact. Now today, heading back to March 27th, we are looking at 12:30 GMT. We have unemployment claims and pending home sales. Both of these are very, very economic related. We should be expecting something very nice to be happening out of this. As you can see, unemployment claims actually went up by 6,000, as the forecast says right now. Now, can we expect this to happen? Yes, of course we can, because it does. All right, we're not looking at a major, change in number. That's 6,000 more people. It's not, 20,000. It's not 40,000. We're not seeing, a major issue change here. It's more or less a regular change. FOMC chair, or the Federal Open Market Committee chairwoman, Janet Yellen, said in her speech that was, I believe, last Thursday, if I'm not mistaken, that a lot of the unemployment claims that are being made are not actually people who are unemployed. They are people working part-time and seeking full-time employment. Now, whether we actually choose to believe this or not is completely up to our own decision-making, but the fact of the matter is, obviously, the American government is really trying hard to make sure that things look as best as they can. And so what we're really expecting here is they're going to do anything they can to push strength in favor of the US dollar. American markets on Thursday are usually pretty warmed up, so they will have volatility and liquidity. I'm expecting to see something happen there, but again, we should be placing a lot of focus on the European market. We really should look towards how can we get the most out of the European market before the American market starts, because what we've seen for the last 2 days since Tuesday is no matter what, the European market plays itself very well. All right, makes nice movements. You see good participation, good liquidity, and a lot of interest in trading there. Same thing on a lot of the Asian market assets as well. But when we come to the American market, we're just seeing a dead stop. There is movement, but very little, and we do not want to have to be reliant on this kind of thing. So, guys, if you are able to get up early, if you're able to maybe stay a little bit later in the evening, especially for those of you in Australia, take advantage of that European market. It's going to be a good one today. Euro, GBP, the GBP CHF as well, the Euro CHF. These are going to be movers. So keep your eye on the ball. You have a pretty actually open day here. After Yeah, after 9 a.m. GMT, we're not even going to be seeing any other European-related things. You have retail sales on the German, excuse me, not the German side, the Great British Pound at 9:30 a.m. also. That's going to be in less than a half an hour. Oh, no, I'm sorry, a little more than a half an hour. About 40 minutes then. Okay, you have retail sales there. This one is actually going to be very interesting to watch because it is coming out of a negative balance at this point. The rating was negative 1.5% as of its last report, and it's going to be bumped up to 0.5. That means growth, that means progress, that means a nice rise in the currency strength. All right, guys, thank you very much for listening in today. This is Rick Majors again at Opteck.com. Thank you very much for coming and watching our daily market briefing. We will be back on Monday with our next briefing, so don't forget to click like and subscribe and stay with us Monday through Thursday at 9 a.m. GMT. I wish everyone a wonderful trading day.